Okay, let's take a look now at the day's business news and the continuing effects of that coronavirus outbreak is having on various industries. To tell us more about that, our business editor Stephen Carroll is here with the details. Stephen.
Eve, it's a story with huge economic ramifications that we're seeing effects on sectors like factories and also travel being affected by the quarantine too. The latest place to be hit is the Chinese gambling enclave of Macau. It's closing its casinos for 2 weeks in an effort to stem the spread of the virus there. Macau's chief executive saying the closure could be extended further if necessary. The city attracts 35 million visitors a year, but the coronavirus has hammered its gambling industry over what is usually one of its busiest periods. The only other time that Macau has closed its casinos was during a typhoon in 2018. Now, we had seen stock markets slump dramatically on Monday as they reopened after the extended Lunar New Year holiday. Today, things looking a little bit more stable. Shanghai and Hong Kong both up by over 1%, but those markets saw slumps of around 8% yesterday, so they're still down sharply for the week. European shares starting the day up as well. Mining companies seeing gains in Europe after very volatile trading in commodity prices on Monday. That, of course, feeding into the processes of what's happening in China too. London, Paris and Frankfurt all seeing gains in the open. The oil company BP, interestingly, seeing its shares in London jump by over 3% after its latest profit figures beat expectations. Now, oil prices have also been affected by the epidemic, so much so that the cartel of oil-producing nations OPEC is said to be considering slashing oil production in an effort to stop prices falling dramatically. Over the past month, the price of Brent crude, considered the international benchmark for oil, has fallen from almost $69 a barrel to just over $54 today, up slightly again on the day-to-day, but coming after a long series of falls. That recovery perhaps partly down to those reports of OPEC cutting supply. Now, many international airlines have cut or suspended flights to China. Now the government is telling domestic carriers to continue flying despite the epidemic. That's despite the sharp drop in demands for flights in and out of China. Beijing has criticised countries, including the United States, for imposing travel restrictions, saying that their steps were excessive. To other news now, the parent company of Google has for the first time released figures on how much money it makes from the video website YouTube. It comes after years of pressure from investors who wanted to see how the figures break down across the online advertising giant's earnings. Despite showing major growth across its business, investors were disappointed in these results. Shares in Alphabet fell by 4% in after-hours trading. Catherine Viette has the story.
A mixed bag for Google's parent company Alphabet as its profits grow, but not enough for Wall Street. The tech giant reporting an overall revenue increase of 18%, less than what investors were expecting. In a first, the company broke down the details of its YouTube and cloud businesses. Google Search still makes up the lion's share at 61%, with YouTube accountable for 9% and Google Cloud 6%. This is something investors have been demanding for years, and the move to greater transparency has come after founders Larry Page and Sergey Brin stepped down from the company last year. Despite growing competition from Facebook and Amazon, Google is still the clear leader in the digital ad market. And many see YouTube as a bright spot for the company. Alphabet chief executive Sundar Pichai says there are 2 million paid subscribers, and he expects that number to grow. Meanwhile, the video site has announced measures to clean up the platform, saying it will remove any election-related videos that are, quote, manipulated or doctored to mislead voters during the U.S. presidential race. Google says it's part of efforts to stem online misinformation and become a more reliable source for news.
Finally, for me, there's a new analysis suggesting that viewers aren't switching on to Apple's new streaming service. The calculations from researchers Bernstein say that only 10% of eligible customers have taken up offers of a free trial since Apple TV Plus launched in November. Now, Apple doesn't provide subscriber numbers, so this is analysis done based on accounting figures. The analyst Tony Sacconaghi has estimated that only around 10 million people have signed up in the first month. That's the same number that Disney's rival streaming service signed up in just 1 day, suggesting that Apple could be lagging far behind in the streaming wars.
Okay, Stephen, thanks a lot for that. Stephen Carroll there with our business update. Let's turn our attention now